All right, today we're going to stop guessing and start building. We are going to put together a complete swing trading plan, step by step. The goal? To turn random actions into a professional, repeatable process. Let's get started.
So you have to ask yourself this one fundamental question. Are your trading decisions based on a clear, repeatable process? Or are they kind of just guesswork, driven more by hope and feeling? The difference between these two is everything. Let's break it down.
Look at the comparison here. On one side, you have amateur guesswork. It's subjective, it's emotional, and the results are totally random. On the other side is the professional process. It's built on rules, it's objective, and it's repeatable. One of these is a recipe for total frustration. The other is the blueprint for consistency.
This right here is probably the most important mindset shift you can make. See, an entry point, that's just one tiny piece of the puzzle. A real professional trade is a complete blueprint, a full plan with rules you've already defined before you even think about clicking the buy button.
So how do we actually build this blueprint? Well, I want you to think of it like a manufacturing assembly line. Every single potential trade idea has to pass a series of mandatory quality control checks. If it fails even one, just one, it gets tossed off the line immediately. And here it is. This is our 5-step assembly line. First, the trend check, then the entry zone, then stop loss, target, and finally, position sizing. And let me be clear, these are not suggestions. They are non-negotiable checkpoints that you have to complete in this exact order.
We start with the first and honestly the most important gatekeeper of them all, the trend. If the market's bigger picture isn't on our side, then absolutely nothing else in our plan matters. There's a reason this check is first.
The rule here is absolute. First question, is the weekly time frame in an uptrend? Second question, is the daily time frame in an uptrend? We're only interested when both are clearly pointed up. If the answer to either of those questions is no, or even just maybe,
then the idea is rejected immediately. No second guessing, no what ifs. The assembly line stops right then and there. This one rule alone is going to protect your capital by filtering out the huge majority of bad setups.
Now, if an idea actually passes that tough trend check, we can move on. Next up, we have to define our plan of attack. Exactly where we get in and, just as important, the precise point where we admit the idea was wrong.
Okay, for the entry, we're asking, is the price pulling back to a clear, obvious area of support? If that zone looks messy or you're not sure, we reject it. Simple. For the stop loss, 2 questions. Is it placed logically below that support area? And is the distance from our entry to that stop, or risk, a manageable amount, say 6% or less? If the risk is just too wide, we have to reject it. The default answer is always no.
And this brings us to a really critical concept, invalidation. A stop loss isn't just some random point where the pain is too much. No. It's a logical, predefined price. It's the objective signal from the market that your original thesis, your reason for the trade, is now officially wrong.
So if a trade idea has made it this far, it's already a high-quality candidate. But it's not done yet. It still has to pass our last 2 checkpoints, making sure the potential reward is worth the risk, and then calculating our exact position size.
First, the target. Is there a clear, visible resistance level that makes sense as an exit point? And here's the big one. Does that target give us a potential reward that's at least 2 times bigger than the amount we're risking? If that risk-to-reward ratio isn't there, the trade just isn't worth taking. We reject.
And this is how we take all the emotion and guesswork out of how much to buy. Position sizing isn't a feeling, it's just math. You decide ahead of time your maximum risk for any single trade. In this example, it's 100 rupees. Then you divide that fixed number by your risk per share, which is just the distance between your entry and your stop. The result is the exact number of shares you're allowed to trade. Period. So what happens if the formula spits out a number that's less than 1? The answer is totally objective. You reject the trade. There's no emotion involved. If the math doesn't work according to your rules, the trade simply does not happen.
Okay, and all of this brings us to the real philosophy behind this entire system. You might think your job as a trader is to find trades to take. That's actually incorrect. The goal of a professional process is to get really, really good at rejecting trades. You need to understand this. This system is designed for most of your ideas to fail these tests.
The rejections aren't failures on your part. No, they are proof that your system is working perfectly. You are successfully filtering out the garbage to protect your capital for the great setups.
Let's be perfectly clear about what your role is here. Your job, it is not to find trades.
Your job is to be a quality control inspector on an assembly line. Your entire function is to look for flaws, to find reasons to say no, and to throw out any setup that doesn't meet every single one of your strict rules.
So if your primary job is really just to reject flawed setups, then the ultimate goal can't be about the profit from any one trade, right? The real goal is the flawless execution of your process, day in and day out.
And that's really the final takeaway. Real, lasting consistency in your results doesn't come from being busy and trading all the time. It's a direct result of discipline. The discipline to filter, to wait, and to say no to everything that isn't a grade A opportunity according to your rules.
We've just laid out a complete blueprint. This isn't theoretical anymore. So the only question that really matters now is this. What is the very first non-negotiable rule you're going to build into your own trading plan starting today?